can move the highest mountains, cross the greatest oceans, and walk.
Because after you've done an introduction into stocks and the basics of stocks, the tools you'll be needing, the next thing you have to consider as a stock investor is the ability to analyze the stock or several industries or several firms fundamentally. And what I mean by this is the ability to look at its financial statements, right, and get some certain information that will put you on the right track while investing. And the third aspect of this stock investment masterclass is going to be technical analysis. So they come side by side and they work hand in hand. So while the fundamental analysis, because a lot of people will be asking what's the difference between fundamental analysis and technical analysis. While the fundamental analysis focuses on the long term, technical analysis focuses on the short term. So technical analysis, what you're just trying to do is that you're trying to look for similar patterns, analyze these patterns, right, and try to discover trends and certain other factors that you'll be able to deduce from the chart, right, to point you in a certain direction or to point you into a certain trade position that you should be in, right. But for fundamental analysis, what you're basically doing is that you are basically looking, first of all, you are evaluating the intrinsic value of the firm or the stock that you are looking at, because of course the stock indicates, just like I said in the first session, the stocks indicates the ownership in a firm. So if you are calculating the intrinsic value of a stock, which is the actual book value of the stock, right, this is basically what you are doing. This is basically fundamental analysis, and that's only the first aspect of the fundamental analysis, right. The second aspect is now to look at all those external influences, just like the economic factors, social factors, political factors that may actually affect the prices of the stock. And then after you've checked and you've ascertained the external influences, then you can now begin to check for events, certain events, because like I said, one thing that you cannot do without as a trader or an investor is to do without the news, because these have an impact on the valuation of the stock. So you have to check for certain events or certain industry trends that might affect the prices of the stock. So these are basically the four things that you'll be doing when you're carrying out your fundamental analysis, right. And for forex, basically, because you're dealing with currencies and the likes, the only thing that you might have to look out for is those external influences, right, the economic, social, political, and the likes that might affect. But for stocks, you have to consider the three other parts. You have to look at the intrinsic value of the this thing, intrinsic value of the stock. You have to look at the external influences. You have to look at other events, and you also have to look at industry trends, right. So that's basically what fundamental analysis is all about in summary, right. And I'll just give you a practical illustration or practical example of what I've experienced lately when I look at stocks or investing in stocks. Of course, when I had my first, let's say, in-depth experience in the evaluation of stocks, that was in December last year, 2022, when we were preparing for a competition, and I was basically the financial analyst of the team. So we were looking at the centric company Okomo Oil, and we were trying to forecast the future value of the stock, whether it's going to be an upside or a downside. And basically, we used the financial statements, the 5 year past financial statements, right, to predict the future price. And this was where fundamental analysis came into play, because we had to use the information we had. We had to now forecast based on some certain metrics. We also had to look at other events. Okay, what's happening in the company? Do we have any internal conflicts? Do we have any internal prospects? Okay, what's happening in the industry? What's happening in the palm oil industry? Is there a prospect for growth in this industry? Is the government saying they want to contribute certain amount to this industry? Okay, why do we say there's going to be a certain prospect for growth in this industry? So all these factors, right, begin to analyze them, and then they help you to determine the future value of the stock. And recently, I was trading the Nvidia stocks, which is on my MT5. Like I said, this is one of the tools you need for your investment in stocks. If you are doing short term, you will need this, especially for long term. You might use other apps like True and the likes. So I was trading recently, and for those of you that are on my Twitter, you basically see the results of the trade, and the entirety of that trade was basically backed by fundamental analysis. I was checking through the news, and I was seeing a lot of prospects for increase in share value and all, and it played out that way. So this is one importance of fundamental analysis. And just like I said, as I was talking about my experience in December 2022, the fundamental analysis, basically you have to make use of historical data. That's one thing you have to make use of, because you're basically looking at the past financial statements of your company to determine the future value of its stocks. Then you also have to look at publicly known information. You see, there are always places or sites where they begin to post certain information. Okay, the government seeks to contribute this. Okay, there's going to be a one, even as at yesterday, I saw a particular news and saying that a certain company, I'm not going to reveal the company, a certain company is about to do a 1 for 40 reverse split stock. And this is going to positively affect the value of the stock of that company, because a reverse split stock is we like call it a favorable corporate mechanism in which the company tries to gather up the stocks and make it look like a singular stocks, and as a singular stock, and as such, this has a way of increasing the perceived value of the stock price, because like a group of stocks, they cost a certain amount, individually, and then you are trying to bring them together to make one huge pump. So that's basically the use of publicly known information in determining of this future value of a stock. Then you also have to make use of information that is not publicly known. This is not insider trading per se, because insider trading is when like a certain like you are using certain information that is not known by a lot of people, just known by the inner members, the inner chambers, right, of the company, those top executives and all. And because of this, they tend to, let's say, engage in some manipulative buy or sell decisions just for their own advantage. And but then there are also some information that, although they are not publicly known, but they are also still accessible. You get? So these are the three things you will basically be doing as a fundamental analyst. So basically, yes, you are a fundamental analyst right now, just so you know. Right. So how do you actually carry out this fundamental analysis of stock? Because this is basically what I'll be saying: fundamental analysis, fundamental analysis, fundamental analysis, fundamental analysis. How do you go about this? From what I'm saying, since it's basically clear that you cannot do your fundamental analysis without the financial statements of the company. So this is something that you have to get used to, and this information is everywhere. Basically, you just have to search for the company and search for its financial statements. You can get the financial statements of MTN, you can get the financial statements of, name the company, name the stock, you can get the financial statement for that company. And the basics why you are making use of these financial statements is to understand the company, is to understand its operation, is to understand its business model. Because having a very clear understanding of what a company is or what a company does puts you on the right track to be able to make proper analysis from certain information you get from that company. I'll give you an instance. If a company is highly levered, it means that it's running largely on debt, right? So it means that it might have some issues with its gearing ratio, and let's say other issues that might come to play. So this can give you a pointer to the health of the company. Okay, is this company good to buy? Is this company bad to buy? Right. So under having an understanding of the financial statements, we help you will point you that into that direction to know the health of the company per time, right? And another aspect to this is to also consider that, okay, you know that there are some companies that, will I say, that they tend to be seasonal. At some point in the year, their profits are skyrocketing high. At some point in the year again also they are going down. Yes, so you have to understand all these things to, will I say, to determine your buying or selling decision when it comes to stocks. Another thing is to also consider the prospects. Right? You need to have an understanding of the company through its financial statement to know, okay, does this company have the prospect for growth? Right? I'll take you back to that illustration regarding Okomo Oil. Now, in that the 2021, because we use the 2021 financial statement, there was a part in the chairman's report where the basically directors and every other person said that okay, they are looking for they want to buy a certain machine for expansion to get, so this was going to increase the productive capacity of the company. And why we now looked at this in a positive light, because of course this means that if the productive capacity of a company is increasing, it means that it can bring in more revenue, right? Then this is just basically on the internal side, the company side, but we also have to look at the external side. And then we saw that the government, because of the let's say the fuel crisis that was going on with Russia, Ukraine, and a whole lot of other, the war crisis and all, right? This now created a new industry for the palm oil, not a new industry, it created like a new part for the palm oil industry. And this also linking to that information we had was show that Okume oil was good to go. And then like for my financial analysis, like I mentioned during the last session, let's say I made it around that okay, it's going to be at the upside of around 40 something percent, 37 to 40 something percent. And as last time we checked, it was about 27.6 or something. And we still have some months in the year, so there's possibility that it's going to hit that 35 region ish if all things go well. So that's the benefit of being a fundamental analyst, right? So now, when, because basically we look at the stock market, we'll look at the number of stocks we have. We have a lot of stocks. So I'm still on how to carry out the fundamental analysis of a stock. So still stick with me, right? So I'm looking at the second part. We'll talk about the first one. That's going through the financial statements to understand the company, its operations, and its business model. Right. So you agree with me that we have over, there are a lot of stocks we have in the modern day, thousands of stocks, a lot and a lot of stocks. And you can't tell me that you have the time to sit down and get to look at 5,500 of financial statements. Nah. So this is where your stock screener comes in. Like I mentioned earlier, in the last session, your stock screener is basically like your right hand man in this financial game, this investment game. You can basically not do without your stock screener in this game. So what your stock screener gives you is it puts all this information, necessary information you need, so that your P ratio, payout ratio, debt to equity ratio, gearing ratio, cash flow, working capital, all these ratios, it puts it in one whole bracket for you, and you can begin to view it. Your market cap, everything is just there. And I think in the last session, I also put it out. I put in last YouTube video that we released on this stock investment masterclass. You could see how a stock screener look like, right? So that's basically it. Your stock screener gives you all this information on the go. So you might not have to, the only reason why you might have to go through your financial statements, right, is just basically to find out those details that you might not get in your stock screener. Just like the Okomo oil example, we could not get the detail that okay, they were looking for a possible expansion and they purchased an asset that could help with this. You won't see this in your stock screener, because basically what they're giving you, they're just giving you percentages and figures, so they won't give you the qualitative data, right? You won't get that on your stock screener. So this is where your financial statement comes in. So looking at your stock screener, once you have your stock screener, this is what basically what will guide you in the selection of stocks. Because what we're doing in this is that okay, after we are doing all our analysis, fundamental analysis, technical analysis, right? The ultimate goal is to okay, pick a stock that we can invest in, pick some stocks that we can invest in. So this is where your fundamental analysis will help you, because you doing your fundamental analysis, you will know those stocks that are good, and then you will know those stocks that are bad, that you should just throw away, like don't go there, don't go there. You get. So this is where your fundamental analysis comes in. right? So, and for the picking of stocks, because once you have your financial statements, you've looked at your stock screener, you have basically all the data you need, right? Now, the third part is to look at some certain criteria for the selection of stocks. And the first one we're going to be looking at, we're going to be looking at four. And the first one we're going to be looking at is the value line criteria. Value line criteria, right? And then what this criteria is, or what these like call them metrics are for the selection of stocks. They're basically what you use. You can use them together, or you can use them like singularly on its own individually, or you can combine elements from each one of them. Get so they're basically like some selection, like call them checklists. Okay, I'll just put them checklists, right? For usage in selection of stocks. Okay, if you have this checklist and then you look at all the stocks, if they don't tick a certain box in this criteria, it means that it's not a good stock. Okay, you check another stock, it doesn't tick two, it means it's not a good stock. Check another stock, it ticks all the boxes. Okay, this is a good stock. Check another stock, it ticks let's say it ticks one and leaves the other ones and not a good stock. You get, so that's basically what this part we're going into. So we're going to be looking at four criteria for the picking of stocks. The first one, like I said, is value line criteria. And what this is basically saying is basically looking at several fundamental factors and how they can be used to select a stock. So basically, I'm just going to be listing them out. I'm going to be spelling them and how its impacts, or and describing its impact on the stocks, or on your selection of stocks, basically. So now let's now look at the first one of this value line criteria. So the value line criteria, the first aspect of it is saying that when you have certain stocks, or we are looking at the progressive growth of a stocks, or we are looking at the progressive growth of a stock, right? You have to understand that within 3 to 5 years, or in the range of 5 years, right? If the yearly highs of the stock is not 2 times of the yearly lows in 2 years out of those 5 years, then that stock should not be picked. Now, I'm going to begin to sound technical, but then I'll try to break it down as much as possible to get. So, what do I mean by yearly highs or yearly lows? Now, if you look at the particular year, a particular trading year, the yearly high is basically the highest point in which a stock traded throughout the year. Let's say a stock was moving between $430 to $480 throughout the whole year. Like it was going between that range, 430 for the get. So the yearly high, let's say it now stopped at 476. Like that's the highest point it ever got to. That's the yearly high. You get the yearly low, of course, will now be something lower, like the lowest point in which it got to in that particular year. So that's basically the yearly low. So in 2 out of those 5 years, right, the yearly high must be 2 times the yearly low. And this first criteria alone, or this first part of this value line criteria, can eliminate a lot of stocks for you already, because a lot of stocks find it hard to, like say, hit um this particular metrics from my point of view, because I've reviewed a lot of stocks, and this one alone basically clears out like a large percentage. Even if you are doing your own analysis right now and you begin to use this value line criteria, once you begin to implement this first part, you begin to see what I'm talking about. And like I said, you can always find this data using your stock screener. You get, just go to information, check for the yearly highs of a particular stock and check for the yearly lows of that particular stock. And if in 2 out of 5 years you don't see this metric aligning to that stock, then you should kick it out. The second aspect of this is that if the stock price is too expensive, kick it out.